the silver miners as well should be outperforming silver by a lot more, but they're not. And I'm honestly looking for an answer to this question. It is Thursday night, Friday morning, February 21st, and this is the video log that takes 30,000 to a million. Now, main question is, why aren't the gold miners outperforming gold? I mean, the silver miners as well should be outperforming silver by a lot more, but they're not. And I'm honestly looking for an answer to this question. I have some speculation, and I want to talk about that today. But first, here's the account. I've deposited some funds, as you can see. I haven't made a deposit in a very, very, very long time. So I figured that this would be a good time to do it. This is the week's performance. I'm actually down 0.73. 1 month, up just a little bit, 2/3%. 3 months is 3%. 1 year is 26, and you'll notice that these percentages are going down now. Now it's 44. I was up over 50%, but the reason why the percentage is going down is because I've added more money in. So that's kind of how it works. So if you add more money, then the percentage goes down, right? Because if you make 25,000 on 100,000, now that's only 25% over. But since I made it with less money, it's like double the money, right? If you make 25,000 using 25,000, then you're up 100%, not 25. So if you add more money, that's how it works. Mathematics. Don't blame me, okay? Blame math. So, and that's how Robinhood calculates it, which is so cool. I'm fine with that. Don't really care about that. What I do care about, though, is that I'm making a lot of money. So, and you all should care about that too. Let's get some money. Now, onto the account. Since this is what's happened, not much, a bunch of options expiring tomorrow. All of these, except, in fact, 2 here, 2 EXK, 2 Chemical, 1 Chemical Call, 3 HBI, and 1 FXI. FXI is the China Fund, HBI is Haynes Brands. I was trying to get in on that at $12. Didn't happen. It popped up to $14, etc. So these are going to expire worthless. I'm going to collect an extra $15 from here for a total of like 60, 70, something like that. All right, so 3 contracts, $75 total. So that's cool. Oops, that's called Google. Now, Chemical is expiring. If Chemical stays above $9, I'll actually be selling just 100 shares here, but I'll have a couple $8 puts expiring, so that's money as well. A lot of stuff expiring here, so that's great. I get to reinvest that money or keep selling calls against those shares. That's excellent. Here's what's going on though here. XK down $20. Silver down just a tad. If you noticed, I have 5 calls now. I finally actually sold one of the calls yesterday when silver was up. Now it's down. I should have bought back in because I'm looking at the silver. I'm looking at the silver price overnight here, and it's looking pretty ridiculous. Gold as well. Gold is up at 16.36 right now on really early on Friday morning, and silver is at 18.525. So 18.52. So that's a pretty good appreciation there. But what's kind of intriguing me is that gold miners and silver miners are not up more, even though clearly the precious metals have broken through some kind of major resistances here, and there's not much action. And usually what that means is that the gold miners, traders and investors don't actually believe the precious metals rallies. And I want to show you exactly what I mean by that. So let's take a look at gold. So we'll use GLD as a proxy. Oops. So the 3 month, as you can see here, gold has appreciated 10.3%. All right, 21% in a year. So 10 and 20, let's call it. Let's see GDX. GDX is an exchange traded fund. It's comprised of the biggest gold mining companies out there. So 3 month it was 10%. Look, GDX is only 9, and over the year, okay, over the year is a lot more, but the 3 month is less than gold. Is supposed to be a leverage play on gold. I mean, gold is up 10%. This isn't even up 10%. Let's look at SLV here. SLV is on the 3 month is 7%, year is 14. 7 and 14. SIL, which is the silver miners, only 9% and only 18. So in a year, nearly as much as silver has appreciated, which is not that big a difference. I mean, that's not really a leverage play. And a lot of individual names like COF, EXK, COF, is doing absolutely horrible, right, compared to the price of silver. Look at the 3 months, it's down 11%. 1 year, down 19%. It's absolutely horrific. I mean, this is a really poor choice. Now, this is a very leveraged company. Last time, they mentioned that on last earnings call, one of them, their new earnings call is coming in pretty soon, but on the last earnings call, they mentioned that their cost of acquiring silver is basically $23 per ounce, which sounds like a horrible business model. I mean, um, they're basically spending $5 to get 1 ounce of silver from the ground. After all is said and done, after they've sold it, right? So they have a net loss of $5 per ounce. I mean, that's enormous. It's really big. I don't care what kind of expenses they have. That's really bad. And I used to really like this company, because I thought it was managed well and everything was fine. And I do realize that they're a high cost producer and they're gonna really benefit a lot if the price goes up. But the price is going up, and things don't seem to be getting fixed. And I'm gonna stay through this next earnings, and I might just dump the position no matter what, if it doesn't sound promising, because they've had a long time to turn the ship around, and I get that a lot of decisions early on have kind of made things rough for them, and they've had a lot of troubles with their minds and whatnot. But man, like, at some point I gotta cut a lot of my losses. I have a big position in this company. It's really dragging the rest of my investments down. So I'm really mulling and trying to think of what I should do with this company. Whether I should stay in for this silver pop and then try to divest, or I don't know. I don't want to hold it anymore for the long runs, of potential long runs of silver. So it's a very tough decision. All right, so that's Endeavor Silver for you. Hopefully it gets a pop. I'm probably gonna exit half of my position on the silver run up that's materializing in front of our eyes. By the way, I have been talking about the silver run up for quite some time now. So hopefully you're not just getting into this, if you are deciding to trade silver. Obviously don't trade it based on things I say on this channel. You want to do your own due diligence and make sure all the investments are suitable for you, blah, blah, blah. If you don't know what's going on, consult a professional advisor. But anyways, I've been talking about this silver pop for a while now, and it's definitely materializing in front of our eyes. It's not catching up to gold though. Gold's been more oppressive than silver. So anyway, I really like to know what the heck is going on. By the way, this is the rest of my account. If you want to read through the number of shares are here, and then the symbol. You can make your own calculations as to how much money I have in each. Just pause the browser if you need to get more information. This is just my watch list here. Now, I have some speculation, right, that the miners, the gold mining investors, think that the gold run up is just temporary because of the virus, right? So they think rightfully that there's going to be a supply disruption, and the demand is not really going to be hit that hard. And so there's going to be there's going to be similar demand with less supply, right? So naturally the price is going to rise, which is what's happening. And also there's a little bit of uncertainty around the virus as well, and the elections and everything else. So naturally, that there's going to be upticks in the price of gold. That's fine, but they think that's just temporary, okay? And so the miners aren't really getting a bid, because they don't think the price will stay up that high for this long. But if it does, and the price of gold and silver stays high for an extended period of time, they'll have no choice but to buy in because they'll be leaving money on the table. Especially now that companies like Newmont Mining are increasing their dividends because they're just making so much money off this gold price, even though their shares are not getting that much of a bid. Although today they got a really big bid. Let's see, Newmont Mining. I should know this symbol by heart. And what was it? NEM. There you go. So I have not in this account, but another account. I have about $7,000 worth of Newmont. So it was nice that, today got a nice pop, and the stock's been doing really well. 1 week's 9%, 1 month's 11, 3 months is 25. So this is a stock that's performing the way a mining stock should be performing in a gold bull rally, right? In the gold bull market. So it's up 40% on the year and 26% on 3 months. Okay, so it's doing great. But other than this company, everybody's acting really poor, and it's dragging the whole. This one's the only one that's pulling the index up. If Newmont Mining didn't exist, then it'd be really bad. By the way, I have 2 shares of Newmont in this account, and I just wanted to buy them so I can say that I bought at the bare bottom of 2015. And you can see here my total return is 196% in this company, which is kind of insane. I did have more in this company when I bought back then, but I sold them since. I had maybe 20-30 shares here, and then I sold them as it was coming up. But if I were to keep them, I would have had a 200% appreciation on this company, which is pretty fantastic. So this is the 5-year chart. So there you go. Amazing. All right, now back on topic here. So the gold mining stocks, why can't I speak? Gold mining stocks investors do not believe this rally, and I think that's why the price, the overall price of the miners is down. I don't think that the mining industry is in a bad position. I don't think that they're just being irresponsible and they're blowing through too much money like it was the case in previous years. Everybody's tightened up now because of the bad bear market, right? From 2011ish to 2015ish. It was a really, really steep bear market, and everybody's kind of like got their act together. And there's been a lot of mergers and acquisitions in the industry, and there's been some really big ones like Newmont, and who do they buy? Gold Corp and Barrick, and I think Randgold. So things have been happening in the junior space and in the senior space. So it's not like the miners are being irresponsible. They're making money. And when was the last time you heard of a gold mining company increasing their dividend? It hasn't happened in a long time. In a long time. So, I mean, either the price of the metals is going to be dropping by $200 soon, or these mining companies better shoot up. Like, I don't know what's taking them so long to react. Is it investor complacency? Are the price of metals overvalued right now, and are they set up for a big drop? Like, what do you guys think? Whoever follows the mining sector, give me your opinion, because I'm a little bit befuddled, and this isn't a very educational video. It's more like I'm asking you for answers if you follow the sector. And if you don't, that's fine. But I'm just befuddled. I'm trying to think of reasons and whether or not, it's worth putting more money in at this point or not. Okay, well, I don't really have anything educational besides this. Help me out with my search and tell me what kind of research you're doing and what kind of people that you like to go to when it comes to research stocks and things like that. So I appreciate all of that. Anyways, showing my portfolio, added 6,000 in. Percentages look a little bit off because of that, but hopefully I use this 6,000 wisely and make even more gains than before. All right, with that said, I think I'm going to end it right here. Peace out.